Welcome to Allan Reports TV. I'm your host, Allan Labucan from allanberryreports.com. This is the second show today on a new series of programs that we've been doing where we're having key management from resource companies come on the show and do an interview. On today's Resource Stocks Talk show, our guest is Dale Ginn. Dale is the executive vice chairman from San Gold Corporation, and we're going to talk about the work that they're doing on their Rice Lake mine in Manitoba. Before getting started, I always like to get the disclosure out of the way. On the disclosure, we're not shareholders of the company. They are a banner sponsor on our website. They are also a featured company in the Allan Reports email newsletter. We started coverage of them back in September of 2008, and we've also talked about them several times on our past shows. So now that we got that all out of the way, Dale, thanks a lot for coming on the show today.
Well, thanks for having me, Allan.
Okay, great. So we're going to start how I found out about San Gold. Is kind of an interesting story. One of the readers of my email newsletter actually called me up and told me about San Gold, and whenever that happens, I generally do some homework on the company and add them to my radar screen. And then after that event, or after he told me about the company, then you guys started drilling into the hinge zone. And when you guys came across the hinge zone is about the time that I started covering the company formally in my email newsletter. But then another reason that I had added you guys was I was at the Prospectors and Developers Conference a few years ago, and I ran into you actually in the elevator, and you had mentioned that you watched one of the past interviews I did on BNN, and it's always nice to get some recognition like that, and so I started following things even closer, and then I formalized it by featuring San Gold in my report. So why don't you give us an overview on how things have been going since around that time? So we're going back a few years, Dale.
Sure. I mean, since the hinge zone discovery, which was in 2008, we've kept our very aggressive pace of exploration going, and found the 007 zone about a year and a half later. And and all the time we kept developing hard, and so you had basically a very aggressive development and exploration program. And so now at this time we're actually producing from both the hinge and the 007. And the older our mainstay Rice Lake mine, it actually is only contributing under 30% of our ore in terms of ounces this year. So we've already outstripped the old mine, or outpaced it, and our new deposits, our new discoveries are essentially taking over, and they're a little bit better grade, and obviously they're less expensive to mine, being as they're near surface and they're fully mechanized. So yeah, it's been a tremendous growth story. We've got just over 425 employees and another 150 contractors. Beefed up our management team by adding, especially by adding George Peary to our C-suite in the CEO role. Just recognize that the company's grown to a size, and it's different now, and it needs a different type of management.
Yeah, well, one of the we're going to get into some of that management changes and stuff in a little while. One of the things that really stood out to me regarding the hinge zone was not only was the high grade nature of the intersections, but also nice thickness to those intersections, and also that they were found in close proximity to some existing underground workings. So that's, I think, why you guys have been able to go from discovery to production in a very short period of time.
Well, that's right. All of our new discoveries are basically within 2 kilometers of our mill, and we've now really realized that what we're calling our shoreline basalt really is another parallel rock unit, or mine horizon we're calling it, that parallels the older mine horizon, which was called the SAM unit, or the San Antonio Mine Unit. So here we have a whole separate and new undiscovered horizon that is less than 1 or 2 kilometers away from existing infrastructure.
Wow, Mother Nature usually doesn't treat us that kindly in the mining business, Dale.
No, they don't. I mean, it did take some out-of-the-box thinking to go exploring out in those areas, and that's really where, you know, I think our strengths were, especially Bill Ferreira, our chief geologist, who basically took the old model and twisted it around into a pure structural geology model, and kind of almost ignored the rock type. And the rock type is what governed past exploration since the 1930s. It was always thought that you had to be in a certain rock type, which was the San Antonio Mine Unit. And we've since discovered that really any intermediate or mafic volcanic has nearly the same characteristics, which means that the gold, if it's a structural deposit, then the gold can be really dropped out wherever the right conditions are, and it doesn't have to be that exact rock type.
Okay, well, I want to get into a little bit more about that exploration too, Dale, in a few moments. When I look at San Gold, a lot of the news that I see generated is sort of from a dual focus for the company. One is the mining operations and the efforts you guys are making to enhance the mining operations, and then on the exploration front, and that's really exciting as well. And so, why don't we start by going a little bit into the mining efforts, and then we can talk some more about the exploration. So, from an outsider looking in, a lot of the stuff that I've noticed, well, on the mining front, is a few things. George Peary joining the team. He's got a lot of experience in mine operations, and then also the efforts to increase the throughput at the mill, and also bringing more material up to be processed. So why don't you touch on some of those things for us, Dale?
Sure. You know, when we started, really we had one existing deep mine, and we were mining from depths of 5,000 feet. So, you know, in a way, it's a bit like pushing a rope. You're trying to force all of your rock up through a single shaft. When we made our new discoveries, really that all changed in terms of having flexibility. So, and that was our goal when we started this company, was to discover more deposits around us and bring them, you know, into the mill, so that we're feeding it from a number of deposits, so that we're not, you know, completely reliant on one single source. And you know, that's happened now, and so these, you know, all this development we've been doing for the past couple of years is starting to pay dividends in terms of really the mining starting to outrun the mill at its current capacity. And so from there, we've been working as well on increasing our mill capacity, and we've taken it now from a nameplate of 1,250 tons per day, which was our previous maximum. And with under $5 million spent in that mill, we've taken it to around an 1,800 ton a day capacity. We've already hit in a single day 1,764 tons, and it looks to me like we'll exceed 2,000 tons a day before the end of this year for sure.
Now, is that is that achievable with this 5 million in capex expenditures, or we need to spend more to get it up to that 2,000 ton number?
Well, most of that 5 is already sunk in terms of the new crushing units, power upgrades. We've got some other smaller additional things to it's more of a tweaking process now, where we're kind of tweaking the speed of the pumps and that sort of thing. So it's not so much a capacity issue or even a money issue to get us to the 2,000 tons per day as it was prior to us having already spent this money. So we're essentially there now. Now, if we want to go higher, if we start talking about 2,500 plus, it'll likely be another issue of capital, but we're not there in terms of mining that much yet.
Okay, and you got a good amount of feed on the in waiting to be processed, sort of.
Yeah, it's been the very first time in our history we've had stockpiles ahead of the mill. We began the quarter with something around 30,000 tons in front of the mill, so stockpiled on surface. And I believe we've kept pace this quarter, so that stockpile should be still there by the end of this quarter. So, and we have run the mill at essentially as hard as we can while doing these improvements. So we've hit a lot of records, a lot of different production records, both mined and milled in first and second quarters this year.
If my memory's correct, before you started production, you weren't talking about 2,000 tons per day, were you?
No, really, we were talking about between 600 and 800 tons per day, and eventually moving to our past mill capacity which was about 1,200 tons per day.
I see. So by getting the production numbers up there, that also helps bring down your cost of production?
Yeah, unit costs are driven by volume and grade, and grade being the number one factor. And grade is hovering around 7.5 grams per ton currently overall between the three mines. However, the grade we're pulling out of the 007 is closer to 10 grams per ton overall, and so as the new deposits kind of kick in, and we get a little more familiar with these new deposits in terms, the people on the ground, the geologists, the miners will be able to tweak our methods a little bit and work on getting that grade up into the 8 to 9 gram per ton range. And then, volume is obviously coming. We are obviously mining at a much higher rate than we had in the past, and so then your unit costs come down in terms of dollars per ton. And we've shown this in the mill. We're already approaching about somewhere around $15 per ton now, just with the increase in the throughput.
So, what is the estimates for annual production this year? Has that been publicly?
Basically, we're sticking with our guidance we gave at the beginning of the year, which was about 80,000 ounces, and we're pretty confident we'll meet and possibly beat that this year. And then a lot in the years coming up, 2012, 13, 14 depends on the success of the massive drilling program that we have going on. As we're not quite sure how big this complex is. It could be a lot bigger than we.
So that'll definitely affect your planning going forward.
Right.
I gotcha. Good. Well, some of the things that I'm seeing that is quite encouraging is the bottom line seems to be improving and bringing down that cost of production. Those are really good trends that I think will the market will start to understand better.
Well, it's the goal of all of our peers and us. There's a few of us who have made it from an explorer to a producer over the last year or two, and expect to in the next year or two. We've seen our costs start at pretty high levels, above $1,000 an ounce, and first quarter I believe was around 860, and that you'll see that trend come down definitely into the second quarter, and we plan on basically exiting the year at 600 to 650 an ounce.
Excellent. Well, producing more and bringing down your costs, that's a good combination in the mining business.
Yes, it is.
Excellent. So on that note, let's get a little bit into the exploration. At heart, Dale, I'm a treasure hunter, so I always like the exploration front, and I think you touched a little bit on why that's so important, because you want to stay ahead with the drill rig and of your mining operation to keep the mining operation going into the future.
Right, and I'm with you. I'm a treasure hunter first, I think, and that would explain the aggressive stance we've had on exploration. We really feel that obviously you can't win if you don't play, so you have to drill, and you have to drill hard, especially when you have the commodity prices that we have now. And so given that, we do have a mill to feed, and we certainly want to bring our costs down, and really the best way to do that is find deposits near surface, near your infrastructure. But we've successfully done that. Now the idea is to keep that going, but it's also to bring those deposits deeper and within reach of the old mine, so that we're actually using the older mine facilities and infrastructure more efficiently. We can envision a much larger tonnage per day coming out of that mine, except it would be coming from the new deposits.
I see.
Practically we drill to 400 or 500 meters deep from surface, before the holes start getting longer and take more time and whatnot. So, we feel we can access those deeper levels from our existing underground workings.
And that helps speed
and it
up.
helps. It just makes everything more efficient. It adds resources very quickly when you can bring those new deposits deeper, and it turns those resources into reserves, because you've got full access to them, and you've got the ability to define them very quickly.
Gotcha. So, since I've been following the company prior to 2008 there, you guys have had a really high success rate in your discoveries. The one that really caught my attention was the Hinge Zone. I don't know if I have this in order, but I think on the heels of that one, you made the 007 Zone, and then the Cohiba, and I forget some of the names of them since then, but you guys have had a really good success rate with your exploration efforts. What's sort of the keys to that, Dale?
Well, when we started, we didn't realize the impact of that unit we call the shoreline basalt. So we were just going on structural interpretation and kind of repeating patterns, and we saw a pattern that was within the older mine, the Rice Lake mine. Veins formed in essentially conjugate sets, and they formed in, if you want to call it, clumps, and they seemed to cluster about every 500 meters along strike. And there were two predominant sort of directions to these veins. Okay. One was basically east-west, and one was kind of northeast. And so we found, we stepped off, on that pattern into the volcanic rocks, and we had some other indicators such as fold nose indicators and axial planes, and then we basically put together some of the old pits and shafts, kind of laid that on top of all of this structural work, and it all lined up. And you could see a pattern of prospects basically every few hundred meters along strike, and to the north of our SAM unit, our old mine unit. And so we stepped out, started drilling along those patterns, and first deposit we hit was the Hinge, and it was predominantly oriented northeast. It wasn't really along that new shoreline basalt unit. It's kind of to the north of that. We moved again off another 500 meters to the east, and we hit, I think it was the Cohiba zone next. Then we hit the 007 zone. Then we moved west, sort of on the other side of the hinge, and we hit the L13 zone. And as the 007 went deeper, we kept stepping off to the east underneath what we thought was another new zone called the Emperor, but it would appear that the 007 just gets stronger at depth and kind of joins the Emperor, so it's a very, very long strike length. So, you know, there's 5 new zones within 2 kilometers.
Wow.
And prior to those discoveries, I mean, even along the old mine unit, we had the Cartwright, the San Gold 1, and the San Gold 2 and 3, which we discovered between 2005 and 2007. So those were the classic, sort of along the classic model. So there's basically 8 deposits since 2005.
So now you guys have been really busy with drilling off the hinge and the 007, Cohiba, L13, and the other stuff, and those are all fairly close to surface, correct?
Yeah, they're all essentially at surface or close to surface and to depth, you know, that we know of about 500 meters so far.
And it sounds like there's a possibility like that these may coalesce as you go to depth. Is that part of the theory?
What happens is we think they plunge basically to the northeast, and which would roughly parallel the way the old mine plunged. And what happens is they come closer to our mine workings because they don't plunge quite as shallowly as the old mine did. So as we go deeper, they get closer to our workings.
Okay.
We believe that we've hit the 007 or something that looks like the 007 from the 4,200 foot level.
Oh, so these are kind of parallel structure or parallel zones, and the ones are dipping towards the current underground workings. Is that how it works?
They roughly parallel each other, except our new zones are slightly steeper, and that puts them closer to our workings as we go deeper.
I see, okay. Now, first of all, for anybody that wants to do some homework on this, in case this is a little too technical and you want to visualize it, you guys do a really great job of diagrams and pictures on your website that can give people a good 3-dimensional idea of how these things line up. The website, sangold.ca?
Right, or sangoldcorp.com. Either one will take you there.
Okay, and if they go there, you usually attach them to the drill hole results on any of your news releases, correct?
Yeah, we try. I mean, it's hard. It's very hard to explain. It's a bit of a complex system, but we've tried very hard recently to put out some good 3-dimensional drawings. There's also some basically short movies, if you want, of sort of that put the 3-dimensional aspect of it together, and the rock types and the drill holes, where everything sits in relation to each other. Yeah,
it's actually I often recommend anybody that's looking at San Gold to go and check those out, because I think it's really helpful for viewers that want to visualize. Sometimes the technical explanation can get a little above the average viewers in my audience, but those pictures really do a great job in giving one a sort of a 3D idea of what's going on with your drilling at depth.
Right, and we're continually working on that to try to make it clearer as it becomes clearer to us. And
yes.
We realize it's always, it's like any industry. You speak a different language when you're talking to people in your own industry, and we're trying our best to make it clearer to the general public what's going on.
Oh, you guys do a really good job of it, Dale. I go through a lot of news releases every day looking for companies to talk about in my reports or on my shows, and I'm kind of a connoisseur of how people explain their stories, and you guys do a really good job of it. I wish more companies would follow your example.
Well, thanks. It's nice to hear that, because we don't always get that kind of feedback.
Yeah, it's definitely very helpful, the stuff that you guys are doing. So we kind of talked about where things are and looking forward. I don't want to get you in any forward-looking compromises there. What are some of the things on the horizon that you can talk about that we can let our viewers know to look for?
Well, for sure, you're going to see the second quarter, at least the production results out as soon as we can sort of tie up the quarter end. And hopefully, and we're quite sure that you'll see the positive trends continuing, and as well through the rest of the year. But, we've been focused so much in the last two quarters on production. We haven't talked a lot about exploration, and I think you're going to see that start to ramp up here shortly. We've just done land deals that kind of buffer our borders with recently the last one with Wildcat Exploration. So that's very, very large package of land to the west of us and to the north. And then Cougar Exploration is another one, and that's to the east and slightly south. So we're doing deals with the juniors around us to buffer our lands and to extend our geological model, our thinking onto their lands as well. So we've got some good earn-ins there. And we're certainly looking for ways to increase production through our own camp. We're looking at things. We are looking outside the camp as well, but keeping extremely mindful of our core, which is the Rice Lake Belt. But as our company grows, becomes $1 billion market capitalization, and the public expects growth, and we're going to provide that. And you can bet that we'll be the leaders in that.
Excellent. It's funny you brought that up. I think there's a question I have, and maybe we'll make that the final question before I close the show. And by the way, Dale, while I'm closing off the show later, maybe stay on the speakerphone, and I'll explain to you how I distribute the show and everything. But the question I had is, when one of my readers actually made me aware of San Gold, one of the things that he mentioned is that you're not that far from Red Lake, Ontario. And Red Lake, Ontario is one of my favorite gold camps in the world. I've been really successful in picking off companies that are early in their exploration out there. And in the case of Gold Eagle Mines, ultimately was a takeover by Gold Corp. What are the similarities between, you're not that far from Red Lake, what are the geological similarities, or is there any?
Oh yeah, no, we're the exact same belt called the Yuchi subprovince, and it stretches east-west. It starts at about Lake Winnipeg, the middle of Manitoba, and it stretches through Bassett, and then it extends eastward through Red Lake and Pickle Lake and so on. And we are essentially the western end of that same belt. And so the similarities are in that you have what we call greenstone rocks, so volcanic rocks that are wrapped around intrusive rocks, which are like your granites and your plutons, that sort of thing. So Red Lake has most of its mines are in the altered greenstone rocks that are kind of wrapped around these plutons. Exactly the same thing in Rice Lake. Our volcanics are stretched around these intrusives, and these plutons, and these intrusive rocks were the heat engines that, they came in later and they provided the pressure and the heat, etc., that are required to force the fluids which bear the gold and the pyrite and those kind of things, and they force them into cracks basically, and we're basically looking for the cracks, and the patterns of the cracks, and it's the same thing in Red Lake. And I was a mine geologist in it used to be called the Dickinson mine, but that was the predecessor to the Gold Corp mine now, and that was in the late 80s. As well, of course, George was the CEO of Placer Dome Canada, so he actually ran all of Placer Dome's Canadian gold mining operations. So he's extremely familiar with Red Lake, and as am I, having worked there and still have a lot of contacts there. So it is the same. There are slight differences, obviously, as there are everywhere, but even the age of the rocks is the same. No, the similarities are definitely there, and we're only located about 80 kilometers straight west of Red Lake.
Well, I think it's fair to say that Red Lake has seen a lot more drill holes over the years than your neck of the woods there that has these similar geological situation.
Right, and that was one of the attractive things in our belt is, and we're estimating here that this belt, our side of the belt, the west side, has seen maybe 1/100th of the exploration dollars that a Red Lake has seen. And you've seen, the dividends it's paid off in Red Lake, and it's, really we think we're just scratching the surface here on our side, and it's paying dividends already.
Well, on that note, Dale, you've done a wonderful job to talk to our viewers about what San Gold is working on, and you also helped us give a little education there on the similarities between one of my favorite camps in Red Lake and your efforts in the Rice Lake area. So I really appreciate that. I'm all about, on the shows and in my reports, trying to help investors understand more about this sector and the companies that I follow. And so you did a really great job for me today.
Well, thanks a lot. I appreciate that.
Yeah, thanks a lot for you coming on too, Dale. And as I said, I'm going to close off the show, stay on the phone, and I'll tell you how to find it.
Okay.
So on that note, before closing, I'd like to stress that this show and our reports are for information purposes only. We aren't making buying or selling recommendations. It's important for you to do your own research and speak with your financial advisors before making any investment decisions. We're always trying to grow our audience, and any efforts you make to help get the word out about our shows, our reports, and our website is greatly appreciated. We have some thank you messages that we always like to put out. We use youtube.com and Skype to produce these shows so you can watch them at your leisure. We'd like to thank those two websites. Also, we have a group of banner sponsors that are on our website, and they help make it possible for us to do the work. We invite you to check those companies out. You just click on their banner and it'll take you directly to those companies' websites. And of course, to you, the viewers, without you, we wouldn't have a reason to do this show, so thank you very much for tuning in. We're lining up guests for future shows, and the best way to be updated when those shows are out is to be on our email list. If you're not already a subscriber, you can subscribe on our website. It's really easy. There's no charge to be on our email list, and we'll keep you updated on our various projects, reports, and our shows. If viewers have any suggestions of companies that you feel we should consider for future shows, you can send those recommendations directly to me at Allan at allanberryreports.com. You can find that email address in the Contact Us page on our website. And if you send them to me, we'll do some homework on them and consider them for upcoming shows. So you can find all of our work on our website at allanberryreports.com. We hope you can join us for future shows. See you soon and have a great